Hi, this is Ian Coleman from Signal Centre, and this is our video report for the FX majors and the dollar index going into the week, 12th of August 2019. We're going to start off with the dollar index. This is the weekly chart. We're going to break down through time frames, highlighting basically what chart formations we're seeing, what we're expecting to happen in the FX majors this week. So, like I said, this is the dollar index. This is the weekly chart. Here we can see a bearish Elliott wave count to the downside, and seeing this really pretty mixed and volatile trading higher. Most important factor here is this free candle formation. An evening doji star often highlights the top of a trend and the start of a new downward bias. Also occurred or formed close to the 61.8% fib level, which is quite common. If we go to this time frame, and this is the intraday time frame, 4-hour time frame, we only got a mild pullback close to the 38.2% fib level, and then we've seen that impulse sell off late on Friday, so we've broken the previous low. There's really no indication as far as the dollar index is concerned that this sell-off is coming to an end. And if we look to this chart, this is the daily chart, got a 161.8% fib located at 96.13. It's pretty pivotal sort of area from previous price action, and I think that's going to be the focus this week. If that is a third wave, then the move lower should be pretty quick, pretty aggressive, and impulsive. So reflecting that bias back onto euro dollar, we're not going to break down every time frame. Opposite to the dollar index, got a morning doji star pattern. We're in a wedge formation that has a bias to break to the upside. If and when it does break, the measured move target is around about 118, the figure. If we go to this time frame, this is the intraday time frame. So again, we've seen an impulse move to the upside. Consolidation for the last few days looks to have formed a triangle formation, could be seen as a flag pattern. If it breaks Friday's high, then the flag is deemed to be complete, and we should then get an impulse move to the upside. However, if we see a corrective move lower, and there's still scope for that, then our prime area to get long of euro dollar is around about 111.40 at the beginning of this week. Sterling dollar is really interesting. How low can we go? This is the daily chart. Here I've highlighted a potential Elliott wave count to the downside. We've got a 261.8% fib, which we reached on Friday. That's at 120.33. And the reason I've highlighted this level here is because the 4-hour chart has posted a DMARC 13 count. Now that 13 count often highlights the end of a trend and the start of a new upward bias. Now the stop placement for a DMARC 13 count is the lowest candle in that 13 count projected from the low of that candle, and that actually works out this week at 119.94. So for me, I think at the moment it's got to be more value really on buying dips up to 119.94 than to sell into rallies. We need to see a break of 121.30, which is pretty strong resistance at the start of the week, to confirm that we've got a base in place in cable. Going back to the dollar index, if we see an aggressive move lower in the dollar, then potentially we should see a move to the upside in sterling dollar. Pretty complex charts on dollar Swiss. We broke the wedge formation. This is the weekly chart to the downside. Quite an impulsive move, but this area keeps on finding some buying interest, and I'm wondering whether or not we're going to get a larger correction to the upside. Now, Euro Swiss, Sterling Swiss, both highlight that there's potential for that, but it's only potential. The measured move down is down here, eventually at 91.90. If we go to this time frame, this is what I'm talking about with potential upside bias. We've got 5 waves to the downside and then pretty complex price action. The reason why I believe that we could get a bounce is we've got a 13 count here, which highlighted the high. Got a 13 count here, which potentially highlights the low. Got a first, we've got our first bespoke resistance level located at 98.25. If that holds and then we get a higher sequence up to the upside, then we've got a confluence area around about here, which is 10020 on this daily chart. So still looking to sell into rallies in dollar Swiss, especially with the dollar bias, but I do believe there's potential for higher levels going into this week. Dollar yen, no clear indication really that this move is coming to an end. This is the weekly chart. We've broken out of this triangle formation to the downside. Really, to complete this AB C formation, we should breach this previous low, which is located around about 98.63. A retest of the breakout level has been seen. Like I said, there's no clear indication that that sell-off is coming to an end. If we go to this time frame, this is a daily chart. Okay, we're in a channel formation. This channel base continues to attract some mild buying to the upside, and the preferred levels for a short entry this week is 106.20. If we continue to move to the downside, we should breach this low, and a fib level is located at 103.30. Dollar CAD, let's just break down the time frames. Monthly chart, 5 waves completed. We're now deemed as being in a larger corrective formation to the downside. If we look to the weekly chart, here we posted a 13 count. We've seen a move lower. Last week, levels above the Ishimoku cloud have found some selling interest. If we go to this time frame, and again, pretty complex wave patterns. This is our prime short area. We've got a 261.8% fib level located at 134.90. We've got some bespoke resistance located at 134.83. So, like I said, selling into rallies. Again, with the dollar index, the bias being to sell into rallies, we prefer to get short at higher levels. Aussie dollar. Have we seen a base? 261.8% fib on the monthly chart. We had this triangle formation, we've broken it. The measured move target was here. We've now got extremely close to that 261.8% fib and moved higher from the beginning of last week. If we go to this time frame, however, this highlights an expanding wedge pattern. An expanding wedge pattern has a bias to continue to move to the downside. So we've got really sort of mixed signals on a long-term view for Aussie dollar at the moment. But if we go to this time frame, again we've got another expanding wedge. This is the daily chart. We've posted a doji style candle from the trend of lower lows. Could be seen as a morning doji star, but this candle doesn't really fulfill the requirements. To the upside, we've got bespoke resistance located this week at 68.48. Euro sterling keeps driving higher. We saw the wedge formation on Friday, and we had a decent fib level. Risk reward was pretty ample, but we continued to break higher. Now we have just breached this previous swing high, which was located at 93.07. Reverse trend line support is 90.10. If we go to this time frame, okay, so this is the wedge breakout to the upside. This is that previous swing high. We've got a fib level located up here at 93.74. To the downside, I've highlighted two support levels this week. We've got 92.42, and then we've got 91.40 support zone to the downside. Euro yen, and again, higher time frames are highlighting that this pair could still move lower. Very complex chart pattern. Are we in the last wave to the downside? If we go to this time frame, however, got to express some caution. We've got a 261.8% fib located at 117.42. This trend line support continues to find some buying interest. Let's just see where our bespoke resistance is this week, because I haven't put it onto the time frame. We've got one at 119.75, and then if we push through there, then there's a higher bespoke resistance level located at 121.50. Okay, I hope you've enjoyed that video report, and I hope to speak to you again soon. Many thanks. Have a great week.